Welcome all the entrepreneurs and aspiring founders to our next session. We have today Ashwin Raguraman, the founder of Bharat Innovation Fund, a deep tech focused venture fund operating out of India. So we can call it typical Desi fund. Bharat Innovation Fund is a $100 million fund backed by CIIE, the Center for Innovation, Incubation and Entrepreneurship at IIM Ahmedabad. And we would like to know more about it from Ashwin. Ashwin, over to you.
Sure. Thanks, Aanchal, for having me. And I think you called it out. We are a deep tech focused fund. We invest in startups which create cutting edge technology, fairly sector agnostic, invested across sectors. And we have an early stage focus, which means we invest from pre-series A all the way to, we've made investments in series B as well. We have been around now for a year and a half, or a little bit more than that, is when we made our first investment out of this fund. And we're just closing our 7th investment. So 6 investments closed. Our 7th one is just getting signed off even as we speak. And we've invested from anything in media tech to something in the oil and gas space, something in the fintech space, something in the biotech space, fairly wide, except that all of them are at the cutting edge of technology. All Indian companies, predominantly, all early stage. And I think our focus, if I can perhaps add to what you said, is really that we are looking at companies which may be based out of India, but which can compete in global markets and are already doing that or show the promise to build technology which will do that going down the road. And we want Indian companies, or we want to support Indian companies that can address a large global market rather than purely the domestic one. Just another point, I mean, we invest actually out of 2 vehicles, something called the Bharat Innovation Fund, focused on globally competitive deep tech innovative startups. And we have another vehicle which runs parallelly called the Bharat Inclusive Technology Seed Fund. That's a fairly large name, but that focuses a little bit more on technologies that are being built for inclusion in India itself, and has more of an India focus towards underserved sections of the population. So 2 very almost opposite ends of the spectrum, but 2 vehicles we invest out of. And the second vehicle has about 3 investments to date that has been made out of it so far.
Sure. So pretty new in the fundraising is this. So prior to this, it was India Innovation Fund that I understand.
So prior to that, I managed a fund, and I set up a fund called India Innovation Fund, right?
Okay.
Which is actually has different roots from this one. That was perhaps India's first deep tech fund, when deep tech was not even a word that was coined. Set it up back in 2009 maybe. And it was set up from NASSCOM. I set it up from NASSCOM, which is the IT industry body. And the intent behind that fund was to promote deep tech startups, product creation and IP creation in the tech space out of India, which had become fairly mature as an IT services industry. But there was still less on the innovation side and on the product side. And our mission there was to build a fund that would promote entrepreneurs doing this. We clearly saw that the DNA for innovation was coming out of the startup world rather than large companies which were more services focused. And we said, let's try and support them. And so this fund, some of the thesis has really been borrowed from that fund based on a fairly successful outcome we had out of that fund, which I ran till 2017 beginning or so. And from CIIE, the CIIE stable itself, which you mentioned as being one of the prime movers to this fund, CIIE is really an incubator and has seeded many companies. But they also set up a fund called Infuse Ventures, which invested in clean tech startups around the same time that I was managing the India Innovation Fund. Right? So these are these are 2 different efforts, if you can call it that, but pretty much has the same filters in terms of deep tech focus, globally competitive focus, and early stage focus. And we believe that this is the future as far as the Indian startup ecosystem is concerned. You're going to have a set of startups focused on India consumers. And then you're going to have a ton of Indian B2B focused startups, which will innovate and which will develop products for not just Indian enterprise, but even global enterprise. And that's the concept, or that's the thesis behind which this fund has been built out as perhaps a little bit of a larger fund than what we were at India Innovation.
Sure. So I was telling my audience that maybe the fund is fairly new, but Ashwin in this industry, in the fundraising industry, he's coming from that. He's very seasoned player in this industry, in the deep tech domain.
Absolutely. It's been more than 10 years now, right? Maybe 10, 12 years. If maybe 2009, 8-9 time frame is when we conceptualized the last fund. My partners, like I said, a couple of my partners ran Infuse Ventures. They also have a wealth of investing experience behind them. So we've been in the ecosystem for a while. We've co-invested with Western breed Indian funds. We've co-invested with some international funds as well now. And so yes, we have a few gray hairs on our head and a few write-offs and write-downs to show for our experience as well. But we also do have successful journeys. And so we have learnings that we sort of apply as we make new investments or as we support our portfolio companies out of this fund.
Sure. So I think I wanted to ask the investment criteria later on, but when you have raised this, I would also like to understand if you are open to startups across India, or it is just focused for IIM Ahmedabad startups only?
Absolutely not. There's no such filter. There is the incubator, which is at IIM Ahmedabad, which in fact incubates startups from outside of the institute. So the fund itself, in fact, most of us are based in Bangalore as a fund team. Of course, we are spread across Bangalore, Ahmedabad, and Mumbai as things stand. But we've invested, in fact, none of our investees really have, or portfolio companies now have any connection, I think, with IIM Ahmedabad, not even former students or alumni. And so there's no such criteria, to be honest. We invest across startups from across all over India. And we are not hung up on qualifications of our promoters. And we try to stay away from that. I think if there are clever promoters that come from very, very different backgrounds, and we are glad to support anybody who's doing anything exciting and who we feel has a strong future to build a solid startup which solves real problems.
Sure, that's I think amazing. So coming back to what we were discussing, that how is your portfolio companies managing this COVID situation? How are you supporting them, and what do you think could be a turnaround for them during this COVID situation?
Yeah, I think you're right to use the word managing the situation, because I think that's step one, managing the situation. But if you really ask me, there's also a step two, which is, can you derive an opportunity out of this situation? And I think we're trying to do a mix of both. But let me address the first part first, right? And there's enough, funds out there, either global or in India, who have put out so much material and so much thinking around how they feel their startup should be solving or should be adjusting to COVID. Having said that, I do believe there are 3 or 4 buckets of startups, and each of them have got impacted very differently. For example, there are startups which are B2C startups, which have a very high customer touch point. Let's say a bike sharing startup, or something which is very close to the customer and selling direct to the customer, need the customer to be physically present to consume or to purchase their service, right? Or need to be physically present as retail outlets to be able to sell their product or service. And these guys have been hit the most, if you ask me honestly. The second set of startups are the ones who've been one step removed. So take, for example, a fintech startup that is lending to consumers who are then going to a retail store and buying products, or are using even an online store to buy products which are not essential items and which are today not sold. And these fintechs are similar type of, once removed startups are getting hit in a bigger way. The third is the set that we cater to, which are the B2B startups serving large Indian enterprises, not so much the SME segment, but large Indian enterprises or global enterprises. who I believe will get impacted with a little bit of a lag. They're not yet impacted significantly. There will be a lag, perhaps next quarter, there will be some impact they'll see. And at the same time, that impact will be relatively less compared to a B2C startup, right? So they tend to be a little bit more resilient, but at the same time, when things go extremely well, they don't follow that, trend with the same level of alpha, right? And so our advice has been really to our startups, which I think most funds have put out, and we've sort of been in resonance with that, is that, just be careful with your spending. Ensure you have sufficient runway. Be careful about what you're going to do with your money, rework your plans so that you can overcome, we're not very sure what is the direction in which this whole thing is going to head, either from an economical perspective or an economy perspective or even a health perspective. Nobody is certain until there is a clear sense of the direction and the timeline that direction is going to, take. I think we just need to be a little bit cautious. So first one, be cautious how you spend. The second is, I think many of our startups actually have a lot of runway. And we've been telling them to be a little bit compassionate with their teams and not to fire indiscriminately. And I think, all credit to them. Most of them have been able to hold their teams together and, keep them within their startups and not have to resort to any layoffs. The third part that we have been advising our startups to do is that customers are going to be a little bit slower in responding in terms of customers or even pipeline potential customers in terms of closing deals. And our advice to our portfolio has been, therefore, use the time to build relationships. If somebody is not yet paying you on time, you might have pushed a little bit harder at some other point in time. Be a little bit more patient with your customers now. Develop deep relationships where you can, has been our third point. And then the fourth point has been really, and we're seeing this across many of our startups, try and repurpose your offerings and see if there are opportunity spaces that you can actually identify and work on at this point of time where a need exists. I'll give you an example. There's a startup of mine which uses a drone offering it's a shutdown solution that's used in large oil and gas plants. And the drone goes and does a lot of internal inspection in the plants and so on, using computer vision and AI built on that computer vision. And this startup has actually, while it earlier stayed away from surveillance and monitoring type of solutions, they had requests from a few state governments saying, we need to monitor crowds and movement of people during the COVID situation. And can you therefore, can we use your drones and your computer vision to be able to do that? And they've done that well, repurposed quickly. So a couple of state governments are using them to monitor movement of people. Similarly, there's many others. There's a biotech company that is looking to repurpose. They have something called an antibody library, which is proprietary, which is used for cancer, or they've been developing a therapeutic in cancer. And now, of course, the word antibody has become very, very well known. Most of us didn't understand that earlier. But we're trying to see whether some of their technology can be used to repurpose to find some sort of therapeutic for COVID as well. And, so evaluating opportunities in areas which are either COVID specific, or in some cases where we have digital solutions that help enterprises using SaaS models to do things in a remote manner. We're seeing whether we can accelerate the adoption of some of that, because some of the physical meetings that used to take place, and specifically there's a company we have which enables market research through a fairly advanced technology, and a lot of that market research was done physically earlier, are seeing that there's a potential that some of those customers move from traditional mechanisms and adopt their solution quicker. So it's a mix of playing defense as well as playing offense. And you need to be able to switch very quickly between the two. And you can't call yourself or get into one mode or the other too much at this point.
Sure. So specific question from you, Ashwin. Very interesting, the 3 case studies that you've mentioned. In deep tech, when you talk about deep tech, India's automation is at very early stages because disruption in India and automation is a different game in India compared to developed economies. So when you talk about deep tech, what kind of proposals do you get? Second, the chances are higher to fail in deep tech because, you know, Indian economy is not pretty efficient. Even if they have an idea, there should be someone to execute the idea as well. So the failure rate is high. How do you manage everything, good proposals, good ideas to filter from, and what kind of learnings do you get from the entrepreneurs who fail from such kind of proposals?
So
Couple of
Aanchal,
questions mixed in one.
you've rolled, I was going to say 100 questions in one, not a couple. Right? So I'll try to address all of them and remember each part of your question, but do feel free to jog my memory in case I forget some aspect. You're right to the extent that, you know, do we really have deep tech solutions coming out of India is a question we asked, or we were asking ourselves back in 2010. Are we going to have this? Here we are putting out a deep tech focused fund. Are we going to have any startups that are doing deep tech? And fortunately we did. We had some fantastic startups coming out of India, and many of them have achieved global, sort of market or global customers, right? Let me put it this way. Some have even relocated to the US. A company in the biotech space called Mitra Biotech. There's a company in the automotive space called Sedimac Mechatronics, which is doing extremely well, based out of Pune. They're in about 20 million two-wheelers in India already, their product, and they're continuing to expand and looking at geographical expansion and so on. So this was a question for back in 2010. And since then, the Indian startups ecosystem has evolved significantly. And I would say that there are more cutting edge, not just more cutting edge technology startups, but there are many more startups today than there were earlier. The maturity of the startups is more. But if I narrow down to the deep tech space that we invest in, the maturity of startups in this space itself is so much more because of a few reasons, which is entrepreneurs have become more mature over time in India. They've learned from successes in the past. Two, in order to compete, you really need to, be able to get something which is well differentiated. Even in order to get an investment, sometimes you need strong differentiation. And in our case, it's a technology differentiation we look for. I think the third part is there are areas that have emerged like artificial intelligence, which if you go maybe 5 years back, was not forget about being a buzzword, but products were not being used, or solutions were far more lower in its adoption levels. And the emergence of these cutting edge technologies have meant, which are cross-sectoral in their nature, have meant that now you have a ton of people working on fairly emerging technologies and applying it to solve extremely complex problems across multiple sectors. And that has also given a stronger deal flow to our, pipeline and to our, perhaps evaluation. But when you put all these together, you're right. It's harder to call out and it's harder to establish a success out of a deep tech company, perhaps, especially at the stage we invest in. But that's what makes it fun. But more than it being fun, it is also a solid strategy which we consciously adopted. When I looked at, perhaps the earlier fund that I set up, it was half mission and half outcome based. I mean, we set it up from NASCOM, but it was a professional entity which ran by itself, SEBI registered, had a returns focus apart from the mission focus, and we delivered fairly decent returns to our investors. And what we realized as we went through that journey and we were trying to think through what the new journey should be with a new set of people that I got involved in, is that we are operating in a relatively wide space, which means there are fewer deep tech focused funds. The second thing that I've caught on to is that people think that anybody can do investing, right? Anybody thinks, hey, listen, investing in a startup is not a big deal. It's hard, there's a skill. And when you extend that to deep tech startups, there is a specific skill to deep tech investing, which we believe that we have learned, as a fund or as people who've been involved with this fund, and therefore are deploying that. I think the third part or the third question that you sort of asked is in terms of just the survival, right? And while it may be harder for some of these to survive, if they get over that initial hump, when they reach a level where they're able to demonstrate, typically the linear uptrend in or exponential uptrend in revenues and customer acquisition, other funds which follow on in Series B rounds, C rounds are extremely attracted because they realize there's a very solid differentiation that exists, right? And it's harder, the moat, the technology moat that some of these companies have built is so strong that they get attracted to these companies. So it becomes easier for us to get follow-on investments. So I think in a lot of ways, it's a very clearly identified strategy that we have followed. It plays to our skills. It plays in a whitish space where there are relatively fewer other funds looking at it. And at the same time, if we are able to get over early valleys of death or early humps with some of our startups, then it leads to a strong tailwind towards raising follow-on rounds, which is very important in our VC game, right? It's never one investor who takes a company all the way to a unicorn or whatever you call out as success. It takes multiple follow-on rounds to do that. I don't know if I answered all your questions.
Yeah. I think because you're a very good storyteller, so I asked all the questions in one because you could wrap it properly.
Yeah,
but
okay.
I think it is commendable in the B2B deep tech technology, evaluating a startup and then hand-holding them, and then thinking about their survival, getting them globally. I think it takes it's a big and long journey, and it's a big task. I understand. And it's commendable that your startups are doing very well at this point in time. I'm sure that the startups are backed by
Fingers
all of you,
crossed.
your team.
Fingers
and then
crossed.
I'm sure all the best. They will do well. So are you investing right now? Is your fund investing right now in this situation? And what are the focus markets you see in the coming 1 year?
Yeah, as I was telling you, we're just actually closing a deal this week. Having said that, we perhaps started working on this deal a few months back, right? Which is pre-COVID. We are continuing to evaluate companies. If we find the right companies, we will invest. We don't see a reason to pause. Given the nature of our investing, which is a little bit higher gestationally, right? In terms of it takes a little bit of time for people to get their products into market or even run pilots and so on. So we are not shying away from investing. Our focus, of course, we are very keen to make a couple of healthcare or health tech investments at this point in time and looking out for that. But at the same time, if we find something which is exciting that we think merits our investment, I don't believe we have slowed down in any way from that standpoint, simply because we are seeing something around or the economy perhaps slowing down or a shutdown to what is happening. I think the one catch will really be, it's very important that we meet founding teams. I'm a big believer that you can only do so much out of a phone call or even a Zoom call. But I do imagine that, we will be in a position, if we really like a company and had multiple interactions over phone or video, then we perhaps, do a personal meeting. I would say that is the only, drawback. The other one perhaps is what startups are facing, which is if you need to run pilots with customers, and we are facing this with some of our startups, is sometimes physical presence is important when you're running pilots or even to close deals. And so I see that some startups are facing challenges around that. And therefore, a startup which would have had a successful pilot run over the last 2 months might have that paused. And therefore, we need to wait till they get past that so that we get a true evaluation. Because we like to, our big signal is product market fit. We don't want to second guess the market as far as product market fit is concerned. We want the market to give us that signal, even if it's an early signal. And therefore, pilots and so on are very important and results of that. And to that extent, I think some startups are perhaps facing challenges in the last couple of months.
Sure, I think that's helpful. And What is the USP of Bharat Innovation Fund compared to the other deep tech funds that are operating in the market?
What are the deep tech funds?
So technology.
I'm just,
So
yeah, I'm just joking. Let me not be.
That's great that you're saying that you're unique. That's what I think the audience want to understand. That
Yeah.
what kind of USP that
Sure.
somebody coming to Bharat Innovation Fund should keep in mind.
Yeah, no, I think there are, so let me be fair to some of the other funds that are out there, and we are very much in collaborative mode rather than competitive mode with most funds, right? There, as it is, very few of us in the space we operate in. Many of our investments now, I think all, or out of our 7 investments, if I include the latest one, the first 6 were all co-investments. And in some cases, it's been more than 2 of us, right? There's been 3 funds. But having said that, if you really ask me, we sit in fairly, the company is small when it comes to deep tech itself as a focus area. So we understand what early stage deep tech startups need, perhaps, where they are in their evolution, the amount of patience they require. And we have learned that it takes time for them to reach a certain stage, and we're willing to walk that journey with them and actually give them some support, some sort of support through that journey. So just that basic first understanding itself, I think, is a big deal for startups. The second one, I mean, if you look at all our activities, which, I mean, as a fund, you fundraise, I'll leave that aside, right? We ourselves raise capital from investors into our fund, but if I leave that aside, there are 3-4 primary things we do. Source deals, which is build pipeline. We evaluate deals and make the investment. We support our portfolio companies through either market access, through some amount of strategic mentoring, or through follow-on fundraisers, or even helping them raise capital. If I were to look at this gamut, I think most funds do part 1 very well, which is building pipeline. Any strong institutional fund has got capabilities. Of course, we all have different sources to our pipeline, and I try to position myself as having a better source, but at the end of the day, we all manage to see many deals. The third part, which is portfolio support, also everybody claims to do extremely well. And there will be some differences, but it's hard to quantify and really say. I think it's the way you'll think about it is our style of doing it is different from other funds. So the key, if you ask me, really is what I would call stock selection as applied to the public markets, picking the right startups. And I believe deep tech startup evaluation is a slightly different ball game. It's not, it is skill, it is learnings that you acquire over time that you apply. There's a lot of intuition that is involved, but at the same time, you're not investing as an angel and taking a call just for yourself. There are a bunch of other people you're answerable to in our firms, and therefore you need to make strong cases. So I would say that the USP is really understanding what deep tech, early stage deep tech startups are about, and identifying the ingredients that could go into making successful ones. And that is how I would call it out. Of course, we need to see enough success out of this fund before I can really say that it's a USP to the extent that it has succeeded extremely well with this fund. But certainly we have seen successes in the past. And even with this fund, we are already seeing early signals of success with perhaps our first portfolio company going into a follow-on round now, which is a fairly successful follow-on round that they're closing.
Sure. So I really understand the USP in deep tech. Of course, it must be your USP. But which is one of your portfolio companies that you would like to mention here, which you really admire and you were surprised to look at the innovation coming out from India?
So I admire all my portfolio companies, right? we put our money where our mouth is. So obviously, and these are, I mean, there are many others who we didn't invest in who I still admire, right? It's just that you can go ahead with the investment. Having said that, I think, and then to your second part, I think on being surprised, I am, to an extent surprised by each one of their technologies, many beyond even in our pipeline, the companies that we meet, to the extent that I'm no longer surprised that I'm actually surprised, right? I'm so used to now meeting and encountering entrepreneurs who are coming out with such interesting cutting edge stuff across the board, right? That we are, it's amazing what is happening, at least at a certain or with a certain part of our entrepreneurial ecosystem. If I were to sort of pick one company, and I think more for the sake of giving you an example or your audience an example rather than, talking in the air, and I can't talk about 7 companies, I'll just go by default and talk about maybe our first investment, right? And it fits well, right? It's a company called Entropic Technologies, based out of Bangalore. These guys have built a product that uses brainwave signals and your facial expressions and coding of those facial expressions using fairly sophisticated AI algorithms, and are able to decode any customer's emotional response to any visual stimuli. So if you're looking at a website, if you're looking at an app, if you're looking at a video promotion or an advertisement, if you're interacting with a chatbot, all of this, it can tell you at what point in time you're feeling happy or sad or angry, or you're feeling fear, and to what extent, not just in a binary manner, but in a sliding scale of 0 to 100, what is the level of that emotion? And going beyond that, it also tells you what is the, let's say, the extent of your attentiveness. So strong use case in, let's say, educational content, which is all going online now because of COVID. Or it can also tell you what is the effort it takes for you to understand some content. So if you're making a product demo, how much mental effort am I putting in to understand what is going on? And so they work with large brands and agencies. When we invested, they had maybe 2 or 3 marquee Indian customers paying them, I won't say peanuts, but small amounts. And over the last year and a half or so, they've gone on to get customers in US, in UK, in France, and these are some of the biggest global brands that exist. Some pretty large companies in the Fortune 50 list or 100 list. I'm sure many of them belong. And what I liked about these guys is, and the entrepreneurs here or the founders here, is really their ability to think big about a solution that some investors, and this is what the founder confided in me, some investors, when they first pitched to them, said, hey, you're talking science fiction to us, right? And I'm sure they got this response a lot, and they have been resilient to be able to go out there, get early Indian customers, go into global customers, build a product that is working extremely well. And if you ask me honestly, there are perhaps 2 or 3 other similar efforts globally. And these guys still have the courage to go out there and say, we'll do something that is so unique that people have not really attempted it in the past, and build a solution that is being used, and perhaps even tweak their solution so that it's easily consumable by some of these enterprises. So they're perhaps a good example of the sort of journey we want to see. It's still early days, but I would imagine these are the sort of journeys we'd like to see in the first year and a half or so. And then going ahead, I hope that they're able to continue on the path that they've already taken. I actually, just to go back to your question on surprise, and, we've seen brainwaves being mapped, or I've seen this personally through other efforts, and for some very different use cases related to more of forensic science, and it's been used by people like the CBI in crime investigation. So when I saw that being applied in a very different use case, in a very different context, which is highly democratized in terms of, going out to so many, everybody's a brand, right? Whether you're an automotive company or a bank or a telecom company, or you're touching customers and you want to get down to the root belief or response that your customer has to any touch point that you put out, be it digital or physical. And these guys are getting down to that and getting you the most authentic information on what your customers believe. Just as a caveat, because we get this question a lot, this is not done on live customers because there's a consent level involved. So it's done on your typical test groups, which you know would have otherwise used as focused user groups and so on. You bring a set of people into test, and then you test the responses that they have.
Agree. I think this would be also useful for the investors in evaluating the proposals.
We haven't resorted to this yet, but you just given me an idea. I don't think any entrepreneur is going to allow us to do that. But to be honest, there are a couple of banks which have been exploring or having early exploratory conversations with Entropic to try and understand whether they can use this to evaluate borrowers and therefore lend basis what they're getting back from their solutions. And obviously this will be done with user consent. But there are some exploratory conversations. But I mean, our main use case so far has been the media and brand space that we've addressed so far.
Sure. Very interesting conversation with you, Ashwin. Last two questions: that if somebody wants to email you the proposal, somebody wants to connect with you for deep tech, they have an idea where they can connect with you.
I'm on LinkedIn. I'm reasonably active. Though some people who haven't got a response from me for many days may beg to differ, but I normally do respond, at least to the extent that I try and pass on my email address or email ID so that they can mail in their proposals. My only request to anybody who's reaching out is to understand well what we do and what we invest in. And even if they think that they may fit in without being certain, we're happy to entertain that. But if somebody is doing something which is so way off that it has nothing to do with our fund, we like to see that entrepreneurs have done a little bit of homework on what we invest in before reaching out. So that would be my request. The easiest way is to hit me on LinkedIn, and I normally respond to any inbound sort of questions. My email ID is also ashwinar@bharat.fund. So if anybody who's listening in wants to email me, they could do that as well.
Sure, perfect. And last surprise question, as you were surprised from your portfolio companies, is you understand about FundTQ. We also want to hear some good words about what you think about the concept and you think about our platform. That it is a SaaS-based fundraising platform.
Yeah, no, I think it's a great concept. And like we tell, I mean, there's no, or let me put it this way, there's so much room for so many more platforms that can come in and try and do things differently from the way they have been done in the past. And I think from what I heard from you as an introduction to your platform, is that you are making an attempt to do things differently from how it has been done in the past. And every time, I mean, let me give you a small anecdotal example. Given COVID, we are not able to get out, right? Mm-hmm. And I'm an avid squash player and my squash court is shut as well. So, I resort to walking around in my complex. Fortunately, they allow that to happen. I can just go around for a walk. And I have one of my neighbors who, is in large corporate, but is very keen in the startup investing space now. And he's already made a couple of angel investments. And he keeps walking up to me, when I'm walking, and he'll be like, hey, I came across the startup and what do you think? And so what I'm trying to say is the interest in startup and startup investing has become extremely high of late, right? And there are many reasons. I won't go into all of them. And these are with people who are not like me, who's doing this as a 24/7, sort of effort and has done it for many, many years. And but I like the fact that so many people are getting involved, either as founders in startups or as advisors to startups or investing in startups. And I think all of these people need a platform. And I think there are models that have been put in place in the past, but the startup ecosystem is evolving so much that you have a huge role. And if you think differently and try and do it differently, I think there's a great promise that there is a lot that can come out of what you've set off doing. And I think, like we tell all our startups, it's all about the execution. But having said that, I wish you all the best with your efforts, and hopefully you'll create something unique as well.
Thank
It
you.
won't
Thank
be
you so
deep
much.
tech, but it hopefully will be unique. Yeah.
Of course. Thank you so much, Ashwin. And thank you for coming with us on this webinar. It is surely one of the best webinars I've ever heard now. Because, thinking about the deep tech and talking about artificial intelligence, talking about your portfolio companies, I think it was an amazing webinar. And all the best for your, all the portfolio companies, and all the best for your venture also. We surely
Anchal,
would see good
pleasure
exits.
talking with you. I think I had fun, and I hope your audience has some takeaways from this. And once again, I wish you the best for your platform. And hopefully we'll have a chat when it's a lot bigger, and perhaps
Sure.
that's at that point in time I'll be the one reaching out to you and saying, hey, listen, why don't you do a follow-on interview?
Sure.
So all the best again.
Thank you so much, Ashwin. Thank you for your good words.
Bye-bye.
Bye.